Treasury bills and dollars, those green pieces of paper in your pocket, are the same thing in our system. When Lincoln introduced paper money to pay for the Civil War, it bore interest. It was considered debt. They didn't consider it money probably till the end of the century, even though they used it as money. But that fiat that he created and then FDR enshrined essentially is the same thing as government debt. So what happens if we have too much of it? They're just going to monetize it. The Fed will buy it. They won't ask Congress for permission. They'll just do it. This is the way the folks at the Fed operate. And I think that, unfortunately, the Congress is comprised of so many people who are just incapable of dealing with financial issues. You can't even talk to them about it. Compare our Congress today with the Congress we had in the 1930s, when you had people like Carter Glass and Harry Stegall and many others who were very sharp human beings, right? Running the country. So unfortunately, we may need a constitutional amendment where we hire a manager. But, if Congress can't even pass budgets, we have a problem. That's really the issue. They just increase spending every year and pass a continuing resolution. That's unfortunately not acceptable. So I think eventually you're going to have a very stringent fiscal regime. They'll have to just limit spending, and then you'll see cutbacks in entitlements. Unfortunately, that's the only way to fix it. Defense spending will have to come down. And I think in a way, Trump already sees this. He knows that the country can't keep doing this because we fund it with debt. That's the way it works. But that's the way the system has been set up since World War II. It's interesting. At the end of the book, in the first edition, we talked about Triffin, who had been the great, theorist about what are the costs of running a global reserve currency, right? And he said, well, you have to run big external deficits. And we did. But it was the bigness of the dollar, not our fiscal, righteousness and discipline, that makes people use it. It's the fact that it's so big. You can trade oil, you can trade big commodities, all sorts of stuff easily. There's ample liquidity. So does the world care about our fiscal situation? No, they just want us to continue the way things are. So for them to change is a radical thing. It turns over the whole card table and we start again. So what Trump is trying to do is quite ambitious. And I think ultimately, like I say, unless you see some remarkable development that makes members of Congress suddenly want to sacrifice themselves in the name of fiscal rectitude, I don't see that changing. People need the job. I think they pay homage to that concept. They say, well, we want the dollar to remain a reserve currency. And it will. The reason the dollar is so attractive is because of our marketplace, because we still have reasonable confidentiality for investments. We have the rule of law here, with some exceptions, right? Those are the reasons people want to be here and want to be in dollars. In different countries, they could back the currency tomorrow in China with gold. But are you going to trust the Communist Party in China? No. As I like to tell my readers, there are no banks in China because the loans never get paid back. The state just has to bail them out continuously. So it is the ultimate fiat system. In fact, I would argue the Chinese have more of a debt problem than the U.S. does. I think it should play a symbolic and also an educational role. In other words, I've talked to Judy Shelton about this at some length. Yeah. She's got her concept of a gold-linked bond. But at the end of the book, we quote our friend Jim Rickards. He says, look, Treasury ought to be buying gold regularly. That is to say, exchanging paper for gold. Hello? Yes, that's a really good idea. And it would say to the world that we still acknowledge that there are real benchmarks of value, gold being one of them, but other physical commodities as well, right? Even silver, for God's sake, it's been outperforming gold, which is a remarkable thing. But, to me, can we go back to gold convertibility? No. The fiat system is not going to work. And that's not the attribute that people care about. They like using the dollar as a means of exchange. Are they going to use it as a long-term currency, as a store of value? Maybe, maybe not. Maybe they'll invest in a higher growth economy somewhere else. And I think that's the future. I'd like to see the dollar go from 50-60% of turnover globally down to 30%. And then we would have to live within our means. That would be a different world, wouldn't it? And I think that's the vision of Donald Trump. He wants to kind of take us back to a time where the U.S. was not the center of attention in terms of the global economy. You become a reserve currency, and countries are going to say, well, who do I trade with the most? Like Latin America. My wife is from Uruguay, so I spent a lot of time thinking about South America. All of those nations within Mercosur are going to face one another. And yes, they're going to have dollars, they're going to have euro, maybe yen in their reserves for their central bank, but I think they'll also hold gold. The Fed should be holding gold. In fact, I think later this year, finally, I hope, the BIS is going to recognize gold as a high-quality liquid asset And then also it would become eligible to be collateral in swaps. There's no reason why we shouldn't do that. You can even borrow against gold if you have the right relationship with your bank. And they'll lend you, fairly high percentage against the asset if it's in the vault, right? So there are a lot of ways you can use gold as a very active, important asset for a financial institution. Look, gold has a limited utility for investors looking to flee dollars because there's not much of it that's deliverable. Even today, the U.S. is straining because, we may get to the point we don't have enough deliverable supply in the U.S. to support certain financial contracts. So the Russians and the Chinese aren't selling. If anything, they're buyers. The limited supply and the fear that I sense among a number of investors, people just look at what they see coming from Donald Trump and some of his cabinet members and they don't like it, and so they're going to run. But there are limited alternatives for people. For example, do you go into real estate here in the U.S.? I would say no. We're getting pretty close to the end of the cycle in real estate. We're probably going to see a reset in U.S. real estate prices by 27, 28. The maxi reset is not something anybody wants to talk about, but it's a part of the U.S. economy. We have an ebb and flow. As my friend Stan Middleman, the founder of Freedom Mortgage, likes to say, the tides come in, the tides go out. We don't know why, but they definitely do. So, he's seen enough cycles to have a view on this and also runs one of the biggest servicing books in the industry. So, what happens to a firm like that if rates fall? People prepay their mortgages. You'll see a lot of volatility in the credit markets, and that'll be a repeat really of 2020. Well, after we reset prices, we could go back down to 2021 levels of home prices in the next reset. I think you're probably going to see rates fall. Here's the scenario I published recently. Rates fall, we see a little boomlet in mortgages. It'll look a lot like the third quarter last year, but it could go on for a year or so, higher volumes, but prices will go up. You see, we got limited supply in the bottom half of the market, say below $400,000. Above $400,000, you're seeing fatigue. You're already seeing markets cool off. You're seeing prices coming down. A lot of spec homes down south, by the way. A lot of new construction that's just sitting there and going to rentals. When you see a purchase house going to rentals, that's a bad sign. And so in the Carolinas, the Washington area, all the way down into Texas, you got oversupply now in some more pricey homes. But in the bottom half, there's not enough supply. You're going to see that change, though. So I think you'll see a small boom in housing in 27, 28, and then we have a correction. It'll take us down 20%. I've been trying to argue with the guys who run my village that they shouldn't push up the assessments anymore, because I said, look, you want to be where we're going to be in the next downturn. That's where you want assessments to be. If you go too far, then you have to lower them. The world is going to normalize over time. Other societies are going to become more affluent. But the question is, will they have the attributes that makes the United States so attractive as a magnet for investment? There are still so many anti-liberal societies out there, led by Vladimir Putin. And in a way, Donald Trump, being a guy from Queens, is also anti-liberal. He certainly rejects 20th century liberalism as it has evolved, this kind of mushy socialism that Joe Biden and Kamala Harris represented. But, it's very different around the world. If you've had the opportunity to travel, I've lived in the UK twice, these are not the same societies. They don't have the dynamism, they don't have the capital markets, they don't have the free movement of capital within the country, free trade, etc. So the U.S. has still got a lot of advantages, despite our financial excesses. I think what I would say is this. We are going to see markets normalize a bit. Last year was abnormal. Most of my banks were running 50-60% annualized returns last year. That was not normal, so we have given most of it back. I am telling my clients to do your homework, think about things you wanted to own but were too expensive last year, and we'll wait for a little at a kerfluff for it'll settle. They're going to have to cut trade deals with most of our closest allies. That's going to happen. It will take time because the other countries weren't ready to put aside everything else they were doing and engage with Donald Trump to the exclusion of all else. But, that's what's going to happen. I think it's interesting that Scott Bessent is leading these conversations instead of our Commerce Secretary. So ultimately they'll get it done. And then China and half a dozen other states that we don't have good relations with are going to be left. And they're going to be, I think, the ultimate focus. What is the most important agency in the U.S. government? Treasury. And then the Office of Management and Budget. Those are the two agencies that run the whole show. So I think he will be a source of stability. And ultimately, he knows that we need to have stable, functioning relationships with these countries. If we want the Europeans to take the lead in Ukraine, pay for their own defense, great. I think those are reasonable asks. The Europeans weren't ready for that. They have had to discard their own fiscal rules to even start thinking about it, in Germany particularly. But ultimately, I think you're going to see deals with our friends, and you're going to see more contentious relations with China and some of the other countries in the world. I don't think that ends well, because China is kind of like Great Britain on steroids. They are a predatory, mercantilist state. They have no interest in fair dealing with other nations. You can see this with their Belt and Road initiative in Africa. It's been a disaster. Every country that's done a deal with them regrets it.